Hi, Nick. Hi.
Hey guys.
Hello. Yeah, welcome to the Boule research call. Maybe
Can you hear me?
off. Yeah. This is the Boule research call from the 11th November 2001, and today we have Chris Maree presenting spell and guess spell, a meme spell, and Nick Bai is presenting Lido. And I start this call with some general overview. So we have on the Aldin side, we're still discussing which kind of new model we're going to implement. And basically we have opened up a little bit the area we are looking for. And yeah, we will change different stuff. And I think we will update. We will ask for feedback in the Boule if we have something more ready to get feedback on. And it would be interesting what the Boule members think about this. And then, yeah, this is we do in the background, and it's like the devs and the contributors are working on this. Then we have got, I have to check just a second. About the state of different integrations. So convex and ribbon are done. RAR and Badger are in the Rari and Badger are in the progress. And we will wait for new strategies to be launched when the new tokenomics is more implemented. But we will keep on selecting product that we have like a pipeline to integrate if once all the work has done. And yeah, that's from the integration part. And there was there's an idea floating around, and this is like to ask feedback for. So the idea is that we do some gamification for the Boule Plus members. We now have 199 Boule Plus members, and basically what Boule Plus members do, they buy 5,000 Alien token and stake it, and then they have voting rights on this. They vote on the same things we vote, the Boule votes, and also they have a dedicated channel in the Discord, and we want to have some more connection to them because they're quite interested in how the people, who the Boule people on the Boule are, and to engage more, there's an idea floating around, and the idea is that every 2 weeks there's the community ask question in written form, and then everyone can answer the question, but also members from the Boule would be asked to answer some of these questions, and this question can be either, I guess, about the Aldin as a product or different or projects, I guess. And maybe Shirley can add something to this. Did I miss anything? So it's just a question. What do you think about this?
Yeah, so basically, right now we have 199 Boule Plus members signed up, right? So these people basically they just stake 5,000 ALD, and they can participate in the voting process as well, right? Just their voting results will not go into the calculation whether the assets will be listed on the platform or not, but their voting results will be evaluated, right, to get Boule Plus incentives, right? Because we have 2% of the tokens going to Boule Plus just to incentivize broader community to participate, right? And most of the Boule Plus members are actually very keen learner and a researcher, right? They have been attracted to this process, right? Because they want to learn from the big brains, right? So from a number of community calls, and also a lot of people have been asking about the projects recommended by Boule members. They want to learn more about this, right? And So, on the call yesterday, some members just asked, they really want to, learn from Hassan, right, on how he think about, element, even though we're not, integrating that project, immediately on the platform, right? But they want to, learn more, right? How Hassan look at the projects, analyze it, right? They have further questions around that, right? So I think, there's a benefit to encourage this interaction between, the broader community, the Boule Plus members, and also, the big brands. And we're thinking to do a small experiment. Maybe we just launch a program called Aladdin Ask on our forum. And so basically any community members can go there just to post any questions, right? And anyone can go there to answer the questions, right? The big brands and also, everyone else from the community and also, from other communities as well. And so for every epoch, right, because every epoch is 2 weeks, and then we can have the community to vote for their most favorite question and answers, vote for the pair, right? This is very similar to Miro, but Miro just, vote for the articles you like. But in this case, you vote for the pair. So there needs to be good question and also, good answers, right? And the top, like 10 pairs, right, will get rewards. So the DAO will grant, some Aladdin tokens, right, just to this effort. I think it does help the community, members to interact with each other and encourage more, learning and research activities. And so we would like to get some feedback from the Boule members, right? If you guys would be interested, to participate in something like this.
Okay, so no feedback. So it looks like they all agree with this. Yeah, maybe we have to, it's relatively new to give any feedback. So we should, yeah, I guess we will have a written form of this, and then maybe we can try to get, yeah, it's more easy to understand what we do, and then get feedback on this one.
I'm all for it. Sorry, I'm driving right now trying to get home, but I think it's a great idea, and I think it is something else along with just these weekly calls that really could be valuable to so many people. Just learning and listening. I know I look forward to this call every week because I've learned a lot myself from everyone in the group. So just sort of fostering that community around learning is awesome, aside from the actual product that we're offering through the protocol.
Okay, thanks. Yeah, thank you. Drive safe. And okay, thank you for this. And yeah, that's true. We all learn a lot from each other, I guess. We see very different style or approaches people have according to products or how they look at protocols and what they are interested in. So I think this is the point we go over to the presentation. And I'm looking very forward because, yeah, I'm somehow had a, not a, the one of the leader of the meme spell who, Daniel Elista, I don't know if it's really his name. I asked him for an audit like 2 weeks ago, and he said, yeah, it's all audited. And yeah, I didn't find an audit for this one. Just part of the code is copied from Sushi, I guess. So yeah, looking forward to hear something about Abracadabra and Meme Spell. Meme is the stablecoin, Spell is like the project or the government's token. And the other project is Lido. So did you decide, Chris or Nick, who starts with the presentation?
I'll go first. It'll lead well into Chris's.
Okay. And last time I missed, I would ask you that you can provide some information how you connect to the project, or if you are connected, or if you hold tokens, or anything in this regard, because I guess we should be transparent on this.
Yeah, I just farmed this one.
Okay.
So,
thank you.
I'm
go ahead.
going to present a strategy where I think that we should allocate part of our, yeah. Can you guys hear me? Am I like, okay.
You're breaking up kind of a lot, for at least for me. I don't know if other people are getting that.
For me as well.
Yep, pretty janky.
Can you guys hear me?
Barely.
It's still pretty laggy.
Yeah, it's been choppy.
Yeah. Yeah. My computer has been slowing down a ton. Maybe if I turn off video, it'll work. Okay. I turned off video. It's really, you know what? But I could.
Nick, you sounded better after you shut off the video. I don't know if you're trying to speak now.
Oh, really? Is it
Yeah,
okay
it's a
now?
bit-
Yeah, there you go. Yeah, you sound
Yeah,
much
that's
better.
fine now.
Yeah, try to go for it.
Okay, cool. Yeah, let's do it. All right. My computer is near the end of its life cycle, I think. So my strategy is, I think that we should allocate part of our fund towards just being long ETH. And I'm going to present a pretty boring, but I think like pretty attractive on like a risk reward basis strategy to just earn additional income on that ETH. And we can farm Lido. We can farm CVX. And I know we have other strategies that farm CVX. And so I guess I'm sort of presenting like a second opportunity where I think you can earn a lot more income on your CVX. So the strategy to earn Lido is pretty straightforward, where you would buy Lido and you would LP it on Curve. So right now, today, there's a nice like 35 basis point bonus to buying Lido or buying staked ETH on Curve today. Staked ETH is a representation of the ETH2 staked by the Lido protocol. I'm sure most people here like know about this strategy, so I don't think this is necessarily news, but I do think it still is like the best way to earn ETH, and the Lido team is very trusted and committed to decentralization. So I think we should just have this as like a base part of the fund. The APY for staking ETH on Convex is around 7%. So 3% comes from ETH2 staking fees and Curve trading fees. You get a tiny amount of CVX, but I'm also assuming that we're earning CVX with our other stablecoin farms. And you're getting around 4% LDO, which can stack over time. So why Lido? I think today Lido is a completely useless governance token, but the Lido team is a really strong technical team. They've always done things the right way in terms of being committed to decentralization. And I think this will allow them to grow. Like by all metrics, they're growing a ton. They have today a 15% share of the ETH2 staking market, and they will continue to, I see no reason why this should slow down. And they're really committed to partnerships across DeFi to get more liquidity and utility for the Steph token. This is Lido's share of the ETH2 delegated staking market over time. As you can see, they just are completely dominating this market. I think Rocket Pool has come online recently, and they're an interesting competitor, but they have a lot of room to make up. So that's Lido, and I think we should just over time just accumulate as much Lido as possible. I think Lido is going to be a big player. ETH2 staking is on the horizon, and I'm interested to see what they do with their treasury. But the Lido tokens presumably will just be able to control this treasury over time, and I think that they're a good team to bet on. Now, in terms of the CVX, this strategy might be newer to some people, where you can stake your CVX today, and you can earn a voting token called VE-CVX. So Convex is one of the largest holders of Curve today. You can sort of view them as sort of a like a derivative of Curve. They have almost 50% of the voting power of Curve. Curve, if you recall, is this stablecoin like AMM that's generalizing to just any token to any token. But I almost view them as the base discount rate across all of DeFi. And a lot of pools try to buy for the Curve emissions, and they try to incentivize Curve pools to have liquidity because these are some of the lowest fee pools across all of DeFi. But a lot of protocols recently have realized that instead of incentivizing the Curve pool itself, why not bribe some of the largest holders of Curve to increase the gauge weight for Curve pools, which will increase the Curve emissions. So rather than incentivizing Curve LPs themselves with the token, just bribe the CVX holders with the token and get them to vote on your pool to increase Curve emissions, which should achieve the same goal of increasing your liquidity. And today that APR is 40% for staking your CVX, but the bribing interface has only really been on the scene for the past 4 weeks, and every single week the APR has gone up as more protocols realize that the bribing, the efficiency of bribing is much better than just incentivizing the Curve pool itself. So the app that I use to like collect bribes as a CVX holder is this app called Vodium. As a CVX staker, you can delegate your CVX to someone who can vote on your behalf and can distribute bribes to you. Vodium is like the most well-known of these delegators. So Vodium provides an interface for protocol developers to like deposit bribes for CVX holders. Say, if you vote for this pool, we'll pay you in like Spell or FXS or Badger, etc. And the Vodium interface is also a really good way for you to collect your bribes, but you can also just vote directly on Convex. I guess like the one proprietary like feature of Vodium is that if you delegate to Vodium, they will optimally vote on your behalf. But what I do, and I think what most of the most users do who like keep up with bribes, is they will look at the bribes each week and pick the token that they want, which will give you like the highest dollar per CVX. And today you can earn Spell, Frac shares, Badger, but actually Lido soon is about to bribe. So this is a chunky paragraph, but this was proposed, I think, this week, where Lido is proposing to switch some of their Curve liquidity mining rewards to bribes for CVX. Their opinion is that it's more capital efficient to bribe CVX holders to increase the gauge weight for the Lido step pool than it is to mint Lido directly to the Curve LP holders. Similarly, Abracadabra and their Spell token has been doing the same thing. They view it as more capital efficient to bribe Convex holders than to mint to the LP pool. But also part of Abracadabra's core strategy is to accumulate Convex over time, because Convex earns Curve, and they can use this to incentivize further pools. Their idea is that they just want to get as much of the Convex and Curve market as possible and use that to enhance their hold on the stablecoin market. Yeah, so that's my last slide. I guess my thesis again is let's allocate part of our treasury to ETH, let's farm Lido, and then let's use the convex that we earn from the Lido or from all the convex pools and just get bribes and use that to either compound into more convex or to more ETH or whatever we want.
Okay, thank you. So yeah, I don't have questions because I know all of this already. So maybe somebody else has questions. So
I think I have just some. I'm trying to reason through in my head around like the long-term value prop of Lido. Definitely seems like a leader for liquid staking, but I wonder how competitive that market is going to be. Like right now, it's pretty early, and as ETH2 or staking goes online, I wonder if it's going to become more and more competitive. And I guess I'm wondering what your thought process is around that, around like a moat for Lido, basically.
Yeah, I think their moat is, I guess it's partially the technology. I think that they have a huge lead right now. ETH2 staking is not going to go away. I still think the majority of stakers will be like at-home stakers who stake for themselves. But I do think like longer term, there will always be this share of the market that is delegated staking, like retail users who just want to they don't have a full 32 ETH, or they want to get in and out of their staked ETH quickly. And so that's the market that I think Lido can get a really big share of. I don't see why that. I almost view like that market should get monopolized by one protocol, and Lido is committed to decentralization, which I think is the right approach here. So if you stake to Lido, you're still in custody of your assets. You're only taking on the smart contract risk that they implement this correctly. I do think it's early. I think Lido can lose. I think Rocket Pool is definitely the biggest competitor, but Lido has accumulated like a pretty large treasury at this point, and I could see them just they could use that to compound their share. This is more of a speculative bet, but I just think that Lido has such a strong lead right now. It'd be, I wouldn't want to bet on anyone else yet.
Yeah, agreed on that. Yeah, but I do wonder if, I guess I don't have a super great understanding of the tech behind doing like a liquid staking thing, but it seems like something that's not super hard to ship. And I wonder if there are going to be just more and more competitors as more and more of the market cap of,
I think trust is key to this basically. And what I see, the longer a project exists and it builds up trust, so this is like a mode to enter, because then you have really delegate them your ETH basically. Not in fact, not you can just buy it on the market, but I guess somehow, yeah, this is a mode basically itself. Just for every protocol out there, if it exists a certain time, why should you trust another one if the old one is like trusted, if the return is the same? But
yeah, I agree with that. I think like another approach to liquid staking is doing like the Coinbase approach, which is you delegate to Coinbase, they stake on your behalf, and they take a cut of it. You're not in custody of it. I think the decentralized liquid staking wins out, so that would be Lido or Rocket Pool. And then between the two of them, Rocket Pool, if Rocket Pool builds up their share over the next 2 years, then they're definitely worth looking at. But until then, I see like Lido will continue to grow its share. Especially like I do think the decentralized withdrawal aspect of this is actually pretty hard to implement. So, and I think they're still working on it. So there's a lot of, I guess like part of the discount of the Steth token right now is that there's some uncertainty in whether they can implement the trustless withdrawal correctly.
yeah, I also know this.
Oh no, go ahead, Martin. Go ahead. What were you saying?
I just know the research I had on the your project. If I did some background research, and Lido is also involved they have plans to also do other staking platforms, make products for other platforms like Terra and this kind of projects. So they have a much broader scope than just Ether alone. So it's not only a bet, Lido bet, it's not only an ETH, it's also that they can maybe win other markets too.
Yeah, Lido is I think Lido fits the bill for the kind of exposure that I was hoping we would target through Aladdin DAO. I think what Nick said about, we know that Lido is already super successful. It is the dominant protocol when it comes to ETH2 liquid staking. It's also killing it already with Luna staking as well. And then I'm forgetting one. I think it's Matic. That's another. And so anyways, I think this sort of begs the question, what is Aladdin DAO supposed to be focused on? And I want to point out, this to me is an excellent opportunity. I have felt like we have at times been talking about what are almost like venture-like returns. Like we're talking about projects where there's not a token live, the application's coming, whatever. It's not on mainnet, or it just launched, it's unproven. And if folks have the opportunity to farm that token, well, that token might go up 100x. I don't think that's the point of this DAO. I thought the point of Aladdin DAO was to help assess what are some of the best risk reward opportunities, and I would argue that there's so much in our space right now, like Lido, which has so much upside in it. And so Rocket Pool, I'm very fond of Rocket Pool too, but Rocket Pool isn't live. And so I don't even I think what Nick said, again, it very succinctly describes the way I've been looking at these different opportunities. That's new, that's not live, that's unproven. Who cares about it at this point? Let's showcase what is, I think, unappreciated opportunities that are really obvious in the market. And again, this is one great example. Convex has been a really great example. I would still argue I would love to see Orion. I thought was probably as close to the early side of opportunities as I would be willing to go, and it was mainly because it was denominated in stable coins. And I like those sorts of opportunities that are just easy to understand versus having to manage multiple different tokens and understand really complex mechanisms that have, of course, lots of risk that come with them. So anyways, TLDR is, I love this, Nick. I'm absolutely voting yes on this. Great presentation.
Cool, thank you. Yeah,
Thanks, Steve. I did. Really well said. Yeah, I think I also had a question about how we benchmark the fund. Do we are we benchmarking against, I don't know, the S&P, or just ETH? What is the ETH zero interest rate that we should be benchmarking against? And I think ETH2 staking interest rate is probably what we should benchmark against. And I think this is one strategy that will at least keep up with it. And you're earning really liquid governance tokens that have room to go to the upside. They might not 100x, but they might 10x, which is pretty good.
Nick, just had a question. Is there a significant difference between delegating to the Convex team versus the podium?
It's an additional layer. So when you stake your Convex, you can get some bribes right away. So some people will bribe all Convex users. So I know Spell does this. So I stake my Convex and I earn Spell every week just by doing that. But then I delegate my Convex vote to someone else who then actually votes. I don't have to vote to earn that initial bribe, but if you vote, you can earn this extra layer of bribes, and Vodium every week will optimally do it for you, and you'll earn a basket of these rewards. But there's also pretty easy tools that you can use to figure out week to week which votes are undervalued, and you can earn on average 40%, but I from my personal experience, if you just like actively pick the thing to vote for, you'll earn much higher than that.
Okay, gotcha.
So I used it myself. So you mean with actively picking, you delegate to Votium and then vote on the Votium snapshot?
Yeah, you can. So you delegate to Votium, and what they'll do is if you forget to manually vote, they will vote for you. But if you manually vote, they'll override them. But you can do it. You can run a script and then use the result of that script to like automate which pool to vote for.
Okay. Yeah, I think it's a okay. Yeah, the great thing about delegation on Votium is that you somehow collect a bag of different tokens, basically. But of course, you can also vote for a token.
Yeah.
So you don't have to manage it. You can, but you don't have.
Yeah, I would probably say that we would want to take the voting rewards or the bribe rewards and compound them into either more CVX or Lido or ETH. That's what I do every week is like, oh, like FXS, like, you know, Fracture has the highest rewards this week, but I don't really want to hold that. So I just compound that back into more convex.
Yeah, that's true.
One element of Lido, which we haven't really discussed, is, I mean, we mentioned it like adjacently, but not directly, is like the future APY of ETH staking when ETH2 launches. And I think that's like very bullish on this product as well, because like when validators start actually getting the fees, any priority fees, and with MEV, whatever's going to come with that in ETH2, it's going to be like at least double, if not 3x, the current APY that stakers are getting. Like it's likely to be around 15%, maybe more, depending on what happens with MEV. And that definitely is like super bullish for Lido, and I don't think is priced in right now, because right now it's like based on the current yield. But literally within 6 months, this could shift very dramatically if we have the merge happening early next year.
So I never heard of this. So your bet is that to the normal staking fee, you get like MVV fees, and you get like the normal, like how is it called, priority fee?
Yeah,
yep.
Yeah, you'll get all that. Because right now, if you're staking, you're just earning like these fake mining rewards, but you're not voting on consensus in ETH at all.
Yeah, there's no traffic. Okay. Yeah. Any other thoughts, comments on this? So should we move to the next presentation? Chris, are you ready?
Yep, let me just share my screen.
Thank you.
Okay, can you see my screen, my slides?
Yep.
Cool. Okay, so we're going to talk about MEM or Abracadabra or Spell and like the entire ecosystem around that. And I think this is a nice project to talk about because from the previous discussions we've had, we've spoken about Convex, we've spoken about MEM indirectly, we've spoken about Lido now, and this project kind of brings a few of these pieces together. So yeah, it should be interesting to see what we can get out of this. So firstly, what is MEM? So MEM is a cross-chain stablecoin protocol, and it's on a bunch of networks, which is pretty cool. That does give us opportunity in the future to move to other chains. Functionally, it's like a single-sided or isolated money market based off of Sushi's Kashi protocol that lets you borrow MEM against collateral currencies. And what's unique about MEM is that you can use more exotic kinds of collateral types that are actually interest-bearing tokens. So the flow is basically you deposit your collateral into Abracadabra. You get a debt allocation, which you can use as collateral in a loan. And against that, you can borrow MEM tokens. And then you can do with those MEM tokens whatever you'd like. And we'll get into what you can do with them later on, which is where this becomes somewhat interesting. So under the hood, like I mentioned, it uses Kashi, which is SushiSwap's isolated lending market. And what's really cool about this lending market is that it provides isolation in risk between different assets. So like one of the big issues with Compound, for example, and the reason why Compound has so few assets listed on it is that the pool security is only as safe as the weakest asset in the pool. So it's quite easy if one of the assets is compromised to steal all the money from all the other tokens within the money market in a Compound style money market. So like Cream V1 had this exact same problem, and like some of the hacks, not the most recent ones, but previous ones, were vulnerable to this kind of attack, where basically if you can control one of the tokens in the money market, you can mint an infinite amount of that, supply it to the money market, and steal the other currencies. Obviously there are restrictions that are put in place, but in any case, isolated money markets are safer. And they also enable like more dynamic interest rates based on those specific pairs. So you can think of it rather than having like a pool of a bunch of different liquidities or different assets as liquidity being used as something that you borrow against one asset. Instead of like that pooled model, you have like a one-to-one market where you'll have like one collateral borrowed against one other token. So I think that's important to consider with the risk, because when people look at MIM, they often like feel like it's unsafe due to like the auditing and that kind of thing. But I think this isolated money market mechanism under the hood makes it quite a bit safer. So like I mentioned earlier, what really makes MIM unique is the fact that it supports very interesting collateral currencies. So I've got a list here of the collateral currencies that are on ETH L1. All the other layer 2s and side chains and other places where MIM is deployed have different currencies, but for now we're going to focus on Ethereum because that's where we've started with Aladdin, and we can spread out later on down the line. And what's important to note in this list is these ones. I think these are the ones that we should focus on to begin with. So what these collaterals are yearns interest-bearing collateral types, which you can then put into a money market. So you can get, so YV WETH and YV CRV ST ETH, those are interest-bearing ETH positions in Yearn Finance, which you can then use as collateral. So what Nick just spoke about with staked ETH, this currency here is literally that, right? So you can use that 5% yielding or 5 to 10, depending on the rate at any point in time, interest-bearing ETH as a collateral and borrow stable coins against that. And that's where this becomes very different to other kinds of money markets, in that your collateral can actually be very highly interest-bearing. And equally, you can use interest-bearing stable coins to borrow other stable coins, which is a weird concept. So you can use USDC, interest-bearing USDC as collateral to borrow MIM. And then we'll get into what you can do with it later, but you could in theory buy more USDC, put it back into Yearn, and then rinse and repeat and effectively lever up on your stables and getting interest on both Yearn and in MIM. And remember that Yearn is like in and of itself wrapping a whole bunch of protocols all the way down the stack, right? Like that's probably got Curve in it somewhere, depending on the protocol. It probably has other incentives down the line. And then the other ones that are interesting to look at here, I think, are staked Spell, wrapped Ohm, and X Sushi. So these are like more on the degenerate side of ways that you can use MIM, in particular the Ohm one, which we'll look at a bit later. But I think this is very interesting because if a project is already long one of these other projects, like if you're bullish on Sushi and you're earning a yield on X Sushi, you can further compound that yield by borrowing stables against that and then putting those into money markets or even buying more Sushi. One of the downsides with the isolated pools, though, is that there's a limitation on how much MIM can be borrowed against any one collateral type. And this is a bit of a problem, because it means that like once that limit has been hit, like no additional MIM can be borrowed until more MIM is put into the AMM. And that requires like a whole governance action. It's like quite complicated around how additional MIM gets in. So this is like the major limitation right now. Like I think most of the pools on ETH L1 are full, but in any case, there are a few that are not, and there are many pools on other chains that are not full. So the question that I alluded to earlier on is like, what do we do with this MIM, right? So let's say we've taken Nick's staked ETH, we've put it into Abracadabra, we've borrowed MIM. So what do we do with it? So the first thing is to go and get stable yield. And what's really great about stable yield is you're not taking on any price exposure with the debt that you've created. So you've got a collateralized debt position that you've borrowed against, and that collateral, or sorry, that debt, this stable coin, this MIM, you then put into a yield farm and earn yield on that. And you're not directly taking on any price risk on what you've borrowed. So there are two main pools on Convex right now that are pretty good. There's just the straight up MIM pool, and I think that's pooled MIM against USDC, USDT, and I'm not sure what the third, well, there's another coin in that, I think, and that's around 25%. It was 50% a few weeks ago. These tend to be somewhat volatile, but they always are like some of the highest stable pools. And then there's a MIM UST pool, which is quite new, and that's earning like crazy yields on stable coins, like that you can get 50% on, or close to 50 on a USD denominated stable coin farm is always like a pretty hectic thing. So there are obviously risks with doing the stable farming. So if the MIM that you've borrowed is like an asset that's volatile, such as ETH, you need to consider that you can get liquidated and that you need to manage your margin in that position. So when I do this on my own personal yield farming, I'm very conservative on how much I borrow. Like I tend to not want to be more than like 30 or 40% utilized on the position. So I can sleep at night knowing that, you know, even if ETH shits the bed really badly, something bad happens, like I'm not going to get liquidated overnight. I might need to unwind my position in the morning, but I should be safe. And I think different people are going to have different risk tolerances. And obviously, if it's a DAO that's investing or a DAO that's investing on behalf of other people, that risk needs to be considered. And maybe you avoid those higher risk positions. But yeah, so that is a risk to consider. If the collateral is a stable coin, then obviously you can push the utilization way up higher, because then the liquidation would happen in the event that one of the stable coins breaks the peg. But yeah, I think just to reemphasize what I said earlier, the important detail with this particular strategy is that the MIM, you're not taking on MIM price risk because it's a stable coin. So like if the price of ETH starts falling, what you do is you simply withdraw from Convex and repay your MIM debt, right? So you can always unwind the position, basically. Then there's this other idea where you can be a bit more degenerate that I mentioned earlier. And we've seen a lot of people in Ohm do this, where basically you buy Ohm, you stake your Ohm, you get your 7,000 or 8,000% APY in staked Ohm. Then you wrap your Ohm into wrapped staked Ohm. And then you put that wrapped stake Ohm into MIM, against which you borrow some Magic Internet money. It is now really Magic Internet money. And you use that to buy more Ohm, and you repeat this cycle a few times. Now, this is obviously incredibly dangerous, and I wouldn't recommend anyone, like, unless you are very confident in the price action of the underlying asset, doing this. And yeah, we've also, if you look at like the price chart of Ohm on any of these decentralized exchanges, you'll see there's like this wicking action in the most recent crashes. And a lot of that is due to like the flash liquidations that are happening when large positions that have done this wrapping, leveraging, rewrapping thing have been liquidated. But I do think that there is something to be learned from this particular strategy that is perhaps less degenerate, where you could buy ETH, stake ETH, wrap it, borrow MIM, buy a little bit more ETH while still managing your margin. So I think that's an option. So we've gotten this whole way through this discussion, we haven't spoken about Spell. So Spell is the governance token in Abracadabra. And as you can see, its price action has been quite extraordinary over the last short period. It's taken a bit of a dip on the last couple of days, but nothing too bad, I don't think. So the distribution of Spell, the vast majority has been allocated for farming incentives. And this is going into those convex bribes that Nick was mentioning earlier on, predominantly, almost exclusively, I think. And that's to actually facilitate the yields that we saw over here, right? The reason these yields are so high is because of those Spell bribes at the end of the day. And we can actually see that when we look at the gauge weights on Curve, and we can see that, you know, like a large percentage of all of the gauge weight is allocated to MIM, and that is a direct result of that, we have such high APYs. So at the end of the day, this is somewhat circular, right? Like the APY is high because Spell has a high price, and Spell having a high price makes the APY go up, which means that they can bribe more, right? So it's like kind of circular, and as with a lot of these protocols, but at least for now, you know, that circular behavior is being advantageous for people involved. It might come crumbling down, and then we'll see this weight shrink. But I think that a lot of that would be similar with all the other protocols if we were to enter into some kind of bear market. So staked spell is important to understand. So you can convert your spell into staked spell and capture protocol revenue. This is exactly the same as how XSushi works, where in XSushi, like swap fees are like 0.25% and 0.05% goes to XSushi holders, plus like fees from Kashi and all these other things. Same kind of idea in staked spell, where you get money interest from the money markets, and you get percentages of the liquidations and additional revenue generated from other sources. And that's currently like 23%, which is pretty good, given that you can then use that staked spell to go do other things. And I think in the future, I'm not exactly sure how decentralized it is now, but in the future, you can use the staked spell to participate in the MIM governance. So there are some other things that the MIM ecosystem has that we haven't directly spoken about. So they have this cross-chain bridge, which is very interesting. And they can use a lot of the fact that they control the supply and the minting capabilities of MIM and Spell to create bridges across all the chains that they're on. And more broadly, not like in the MIM ecosystem, but adjacent are projects like ICE, which I would recommend you look into if you found MIM interesting. ICE is also pretty cool. Excuse the pun. So there are 4 main strategies that we might be able to take advantage of, or that anyone who's interested in this idea of like leveraged yield-bearing collateralized loans can do. So the first one is, if you're bullish on ETH, would be like the least risky bullish ETH position would be to supply ETH on Yearn and to get Yearn curve staked ETH. So that's Nick's strategy that he described before. You then take that position and you use it as collateral to borrow MIM, and you use that MIM to buy more ETH and deposit back into a cycle. That last step could be ignored. And if you don't want to risk on more, you just take the ETH, you just take the stables and put them into a money market like Convex. Or it's not a money market, but you put them into a yield opportunity like Convex. And that's similar to what the second strategy is, which is the risk neutral strategy. So if you already have a lot of stable coins, you can then supply those to Yearn and then use that as collateral to borrow MIM and then deposit MIM into Convex and farm additional rewards. And I think obviously there's a middle ground between the two of these strategies that I mentioned, where you just borrow against your ETH or your other assets and just put those stables into Convex. And in doing so, like I mentioned earlier, like you haven't actually taken on price risk. So you can always like unwind that position. Like there's margin risk, you can get liquidated, but the thing that you've borrowed, you haven't like traded that away. So you can always unwind the position. And then if you're bullish on Spell, you can farm it or buy it and then get staked Spell and then use that to borrow MIM and do other things with it. You could use the risk neutral strategy or use like a bullish strategy where you buy more Spell, but I would think that that's probably not a great idea. And then lastly, you can LP Spell and ETH on Sushi, and those have pretty good yields on both Ethereum L1 and on Arbitrum. So just as a future point, if Aladdin was to go cross-chain, MIM is already there on most of the chains we'd want to go to. So it's an easy win to be able to have a product there already, which I think is a big plus. And you can also, once you've gone cross-chain, often there's these like mispricing between chains within the same protocol, where you might be able to supply assets on one chain and then borrow on that chain, bridge over the MIM onto another chain, and then farm on the second chain. So taking advantage of where it is the cheapest to borrow and lend, or borrow and supply assets into another protocol. Obviously, managing your risk becomes more difficult now because unwinding it is a multi-step process across multiple chains. But nevertheless, there is a strategy there which can get quite sophisticated. And yeah, that's the end of my slides. So I think that this project is probably what's interesting about it, and somewhat different to some of the ones we've discussed before, is that there is like a wide range of degeneracy of how far you want to take this thing, right? Like whether or not you want it to be like just a simple thing where you are, you're really long ETH and you're trying to gain a little bit more yield, or you want to like go full ham and lever up on ohm, right? That's quite nice that there's like a wide range of things that we can do with it. And that will suit like many different risk tolerances and profiles.
Yeah, thank you very much. That's yeah, I think an awesome overview of this project, basically. And I have one question, more technical. So why has it a limit on meme? Is it just the pools are limited on the meme they can generate, and then you have to adjust it? So why is it the case? It's just governments.
Yeah, I think this is due to the Kashi market that Mem is built on. So if you go on Kashi, like SushiSwap, sushi.com/lend or borrow this URL, you'll see like the same behavior on all of their money markets where because they're isolated, you can't like additional supply on one market doesn't allow you to borrow more on another market. So it's due to that there's limitations. Like there's only so much in each particular Kashi market that can be borrowed. I didn't find a huge amount of detail on how additional MIM is created, but my understanding is that it's governed by a multi-sig, and then additional Kashi markets are then funded with that MIM. But I'm sure someone else on this call knows more about that than I do, and I would love to learn for my own knowledge as well if anyone else knows. But I think that's how that additional MIM comes into circulation.
Okay. Yeah, the thing is, what I understand, but somehow I don't see. Of course, now we have isolated markets. So if one market gets hacked or however you name it, or the liquidation process is not working, then the pool itself loses like value basically. But if you take it, so but this means on the other side, all these pool together, they generate a certain amount of meme. So if one of these isolated pool is hacked, the meme is somehow uncollateralized too, because then the value somehow that's what.
Yeah.
It's just I don't know how. In a way, then if this would happen, then every other pools have to take a haircut or something like this. And I think in the original lending market, this is not the case.
Right. So the way that one of these pools could get hacked, or like what could go wrong, is like the absolute worst case is like all the pools break and you can drain the funds from all of them. Right. That's like everything's fucked. The marginally better scenario is one of these tokens breaks. Right. So like staked ETH breaks and enables someone to mint a lot of it. Right. That's the failure mode where the isolation protects you. So what will happen then is I take my new staked ETH and I can then borrow all the MIM that's in that particular Kashi market, and then I can sell it, right? So in that case, you are right that there is like a notion of a haircut that's applied to all borrowers and all lenders, like the whole system, but it's limited to the maximum amount that can be borrowed in that particular pool. And that's why there are these limitations, because that effectively protects, like there's a lot of pools, right? There's like 20 on Ethereum and a bunch on other chains. And I suspected that if that was to happen, people will just arbit. Like I borrow against MIM, and if I see MIM is at a discount, I'm gonna buy it at a discount and use that to repay my loan, right? Which is like the core mechanism that keeps MIM stable. I think will mean that in the event of one of the pools breaking, it will remain stable, assuming it's not like, like 60% of the pools have been broken. So if it's like isolated and it's like 5% of the total MIM that can be borrowed, then I think that it would be fine.
Okay. Yeah, other questions or additions?
So Chris, when you need to run liquidations on meme, right? When you need to liquidate these farming assets, so do they actually unwind it to native assets?
I think that's up to the liquidator to do. They're going to be effectively buying bad debt from the protocol in exchange. So they're going to be putting in, they're going to be paying back the debt. So they're paying MIM, and in exchange, they're going to get collateral at a discounted value. And that exchange rate will be like equal to whatever the implicit value of that collateral is, minus some discount factor to incentivize the liquidator. Whether or not they then choose to unwind it and take it all the way back to ETH, if it's staked ETH, I don't know. I think that's up to them. And like I've seen with a lot of these protocols that have like weird collateral types, that often can be like difficult. So the liquidator might choose to hold on to that asset, or it all depends on what their like portfolio management strategy is. Like if they want to go back into stables, then they'll probably try and unwind it and sell. Or maybe there's an AMM already for that collateral. I think that'll very much depend on the liquidator's particular strategy.
Okay, understand. And so for Aladdin to integrate this strategy, right? Say on the bullish ETH strategy, you know, the users actually doesn't get incentive to create meme, right? And so probably we should get the users to stake like a Y-earn LP position with us directly. And then we do the backend arbitrage between the yields and the funding cost of meme.
That's right. Yeah, I think that's exactly right. You would want to take the Yearn ETH position and use that as collateral to borrow against, and then like manage. Like if you're doing this in size, then you would obviously want to have like automated techniques for unwinding that position. So maybe, you know, Aladdin DAO wouldn't be comfortable with anything that's more than 200% collateralized, right? So as soon as it drops to 190, then you withdraw some of the MIM from Curve and you pay back the debt in Abracadabra. So yeah, but that's like separate to the liquidation, right? So, but yeah, from a user's perspective, I think depositing Curve ETH would make the most sense, but they could equally deposit ETH and then you zap into Yearn ETH or whatever. Like you can abstract it away from the user. It just becomes more and more expensive, right, due to gas. But I think there are ways to amortize that as well, where you could like gather up a batch of ETH and then do it at once and things like this.
Right, and with the collateral ratio, right, and also the spread between the yield and the funding cost, probably we can do that for 2 to 3 rounds. Right.
Yeah.
Okay.
Yeah, definitely. And it's also something where you don't have to do like everything at once, right? Like you can build up to these strategies. That idea of like supplying Yearn ETH and then borrowing a stable against it, like this is very similar to what Curve's original ETH strategy, or yeah, ETH strategy did, where they would like create a CDP with Curve. Sorry, not Curve, with Yearn. So many weird similar words. Yearn users would deposit ETH, they would create a CDP, borrow DAI against that, and then use that DAI to farm on Curve, and then manage the risk around that like large position that all Yearn holders would have, like algorithmically, depending on what this collateral ratio is. And you could program a smart contract where it could calculate like my collateral ratio is X and I want it to be Y, therefore I need to perform the following action, kind of like DeFi saver, but for like a whole pool of depositors, and anyone can like initiate the rebalancing by just like poking the contract, and then it checks what its health is.
Yep, understood. That's very helpful.
Hey, Chris, one thing I might have missed is where is the like there's like a tool on Abracadabra Money that you can like wind up a stablecoin position, or am I confusing that with something else?
That's right. I just ignored that because it's currently full. So
it is.
like,
Okay.
you would.
What is that normally under? I don't know. I was trying to look this up as you were talking about it, and I'm not sure that that's an ideal strategy either. What I just mentioned is probably not ideal for Aladdin DAO, but it was interesting to me because leveraged stablecoin positions are, I would argue they're relatively safer to use, but there is obviously that risk of liquidation that we probably wouldn't want to expose Aladdin DAO members to.
Yeah. So it's not loading on my side, but I remember it being under the borrow tab. It might be somewhere else, but
they probably hit it just because it's unavailable. But yeah, well, great presentation. I have not been very involved in Abracadabra, just played with it a bit and been really like impressed by obviously the growth of it. And yeah, this is awesome, man. This is part of the reason I love coming to this call, is getting a deep dive on something I've heard about but haven't been able to dig into.
Thanks. I think here's actually that thing that you were referring to, where you can add leverage.
There we go.
But the problem is, if we look here on this page, the borrow about amount of MIM is like $21. So you on that particular pool, that's basically full. But
yeah,
I mean, there are other pools that have like quite a considerable amount of liquidity. And there are other pools on other chains that also have liquidity. So like actually, like look, for example, here, right? There's a fair amount of liquidity here. 46 million MIM can be borrowed here against this WETH contract, the WETH collateral. So yeah, it's all dependent on like how much is available at that point in time, which is I think probably the biggest downside to the strategy.
Yeah. If Abracadabra has done so well that this could be one where we would actually want to deploy a strategy, but the liquidity isn't there, and that's probably one of the main things that might force us to have to wait on this. But otherwise, I think it checks off a lot of the boxes. What you were showing, especially if we go a more conservative strategy here that's stablecoin based and sort of avoids any sort of like higher leverage. But this is awesome, man. Thanks so much.
Sure.
Yeah, I don't have to add anything. Thank you for your presentations. Yeah, great insight and very detailed information about Spell. Yeah, I guess because also we hit the hour, I would have some more questions, but because we hit the hour, I will close the call, and thank you for joining. What we are looking for, we look for somebody to present next week on the side from Maree, who is presenting next week. We look for a second person who didn't present until now. I know, please contact me if somebody's in the call who didn't present and has an idea what to present. Please write me a message right away, and then I will book you for the next week. Thank you very much. So see you at the latest next week, and otherwise on Discord. Bye. Thank you for joining.
Thank you, guys.
Ciao.
Thanks,
Thank
Mark.
you guys. Great
Carolyn.
presentations.
Great job, everyone.
Bye.
Yes, sir. Okay. No, I gotta go. You don't go. I go. I am. No, I'm asking. I don't want you to go.